Let's bring on more our chartists and figure out what is it that they're making of the trading session so far. Kunal, yet another quiet day.
Yeah, yet another quiet day for the markets. Good part is that the VIX is still falling to 12.7 for the India VIX. That probably could help the course of the index stabilize more further, going forward. Because I would believe that, with VIX maybe coming back towards say sub 12 to 11 mark, say over the next couple of days, we could probably see another 200 to 250 points as an immediate upside for the index, and that hurdle around the 23,500 mark on the spot levels, I think that could be taken out for the index. The good part is that even if the indices are consolidating since the last 4 or 5 days, the action is more towards the mid cap, small cap end, and the market breadth has opened up quite well. Lot many underperforming sectors are also making a strong comeback, and I think that's the positive sign for the markets overall.
Okay, point taken. Daljit, I want to discuss the defense pack and the industrials pack with you. But before that, let's listen into the soundbite coming in from the defense minister who took charge of his ministry yesterday, Mr. Rajnath Singh, and he talked about the continuation of policy plus the export push.
जो हमारे पहले प्रायोरिटीज थी वही आगे भी हमारी प्रायोरिटीज रहेंगी और भारत की अभेद्य सुरक्षा और साथ ही साथ भारत की अजेय सेना और हमारे सैनिकों का कल्याण, ये हमारी प्रायोरिटीज में विशेष रूप से शामिल हैं। यानी हम चाहते हैं एक सशक्त भारत का निर्माण हो, आत्मनिर्भर भारत का निर्माण हो, ये हमारा उद्देश्य है। और साथ ही साथ रक्षा उत्पाद में हम आत्मनिर्भर बने, ये सबसे बड़ा उद्देश्य हमारा है। और इस दिशा में एक मंजिल हम लोगों ने तय की है और आप सब लोगों को मालूम है कि 21,000 करोड़ से अधिक का हम लोगों ने एक्सपोर्ट किया है, जो कि एक हिस्टोरिकल ये अचीवमेंट है। और मेरा तो टारगेट ये है कि इसको हम कम से कम 5 साल समाप्त होते होते 50,000 करोड़ से ऊपर ले जाएं, ये हमारा उद्देश्य है।
The defense minister talking about the export potential of 50,000 crores from India. Diljit, what's this say? Yes, the order books of these companies were quite solid. The question was on the execution and then the valuations. Would you still buy afresh?
Yeah, good afternoon. No, I don't think for buying fresh, you will have to look for some differentiated ideas. Maybe within the pack, if you can find something which is a supplier to somebody or which is doing some particular component, some parts or some kind of services that they are offering. So those kind of niche ideas one can still look at. But the frontliners, I think they're all trading at very lofty valuations. Yes, there is an execution happening there. We have seen numbers coming good this time. FY24 numbers were good for all of them. And their order books are also very heavy. But to assume or extrapolate that this similar kind of execution and similar kind of order book will stay for next 3-5 years, which the stock prices are saying, I think that will be too much of expectation. So one has to be very cautious here. If you are holding, obviously you have no reason to get out of it or book profit. But if you are not holding or if you have missed out something, then just chasing the momentum will not be a good idea. You have to look for some ideas which are indirectly linked. No, so for example, there's a disclosure, one company we have in our portfolio, which is more into auto and other things, but also coming up player in the defense. So we picked that up at around 30-time multiple or 25-time multiple. Now that multiple is getting re-rated to 35-40 times. So that's the way you can play maybe some of these ideas. But otherwise, the frontliners, I think now they're all valuation-wise, we are not comfortable.
Okay, that's really the take coming in on where is it that Daljit is seeing opportunity within the defense pack. But Kunal, what about the charts? Because, just when you think the rally is kind of overdone and peaking out, it's completely sort of deceives you.
I think the last week's correction for defense stocks actually got the indicators for many of these stocks to neutral to an average territory. So, the overbought nature of the charts which was there for these stocks lingering over the last many months, that got corrected in the last week's correction. I think the fact that these stocks were very slow paced to move up higher and recover, I think that added to the positivity for the indicators to stabilize. In fact, now many of the charts, like for example Mazagon Dock, Cochin Shipyard, GRSC, HAL, etc. I think these stocks have been making fresh highs for themselves, but the indicators are nowhere near their previous tops. And I think that could probably add more fuel to the rally going forward. BEL and HL are the two picks which I would still continue to recommend at current levels.
Okay, point taken. So that's a take coming in on defense stocks. Last week was perhaps the opportunity you should have bought in. But what about industrials, Daljit? Again, the likes of EBB, Siemens, they're not cheap by any yardstick. They never have been, to be honest. And even the other manufacturing names, the likes of Timken, SKF, all of them are joining the party. Even Craftsman Automation, the OEM basket, the entire theme of manufacturing. How are you looking at ideas in the manufacturing theme, whether industrials or auto anchors, etc.?
This is a sector where one has to be, and it should be a good part of your portfolio. And we are also holding some of these names in our portfolio. Uh, of course, not the big ones, some are smaller ones, because our portfolio is designed for mid and small cap. So we have to forego the larger ones. But still, I think the sector has a lot of tailwinds, a lot of things happening there. And when we are talking of Atmanirbhar and all these PLI policies and manufacturing being given the importance, this sector has a lot more to go. So I think here there will, and good part is that besides these 5-10 names which you just took, the top ones, there are many mid and smaller companies where also one can look opportunity. So for stock pickers, there could be a good opportunity there in this sector.
Okay, a bunch of other stocks which are in focus this afternoon. You've got Endurance Tech. The management commentary has been pretty smart from the presentation. They're targeting the four-wheeler segment revenue to increase now from the current 26 to 45%. So that's something definitely that the street is liking. Nykaa, this has been quite the underperformer of the sort of newly listed names post-COVID. And their FY28 vision is what they've indicated. They're saying that the retail GMV growth is expected at about a 40% CAGR for FY24 to 28. They're saying that they are aiming to reach 3 to 5% EBITDA at scale as well. That stock today, of course, is holding out quite smartly as we speak right now. Daljit, any of these sort of retail plays, if I can call it that, stories that you're tracking, Nykaa, etc.?
Actually, we are discussing some of these names in our internal team. We want to increase the exposure to consumption sector as such, because that was the sector which we were underweight, significantly underweight. In fact, we just had one stock in that space. So we wanted to increase to at least 3-4 names there. And when we are talking of consumption, then these tech plays also come into that picture. Now, only thing is that we have to think differently while valuing these companies from the traditional way of doing things. We're talking of FY28 and these kind of CAGR numbers with such thin margins. What kind of valuation you would like to give? But I think here the game is what is the potential, what kind of numbers they can come over a period of time. One of their peers, Zomato, has already shown that if things go right, very soon they can come into profit, and the profit number can be very large. So I think people will derive some conclusions from that and take this theme forward. We are evaluating some of them. As of now, we are not holding any of these companies.
Taken. So that's the view coming in on consumption and Nykaa. But the other new kid on the block perhaps could be Hyundai. In fact, we understand that the DRHP will be filed perhaps today itself. The IPO papers, the company might be filing with SEBI today itself. And then it is likely that the IPO will hit the street very, very soon. We posed this question to a couple of our experts as well. Listening to what Abhishek Basumalik had to say on this IPO and the implication for the entire industry.
There are two parts to Hyundai listing. One part is obviously, the auto sector doing well, and that part, which is obvious. I mean, definitely auto sector is doing well. We are moving from ICE-based, sort of vehicles to EVs, to hybrids and things like that. So that transformation is happening. But the other interesting play here is that the premium that Indian companies are getting vis-a-vis foreign parents might actually see that a lot of interest from actual MNC companies to list their subsidiaries in India, right? So Hyundai is probably an harbinger of that, but you could actually see more such MNC players coming in and listing their companies in India because of the premium that Indian stocks tend to get.
Back with closing trades right here on 80 now. While the index may be just about very quiet, still holding above the 23,400 level. Look at names like ABB, look at names like Siemens. They're both sitting on some solid set of gains. ABB now higher by 6.5%, Siemens higher 5%. Then, of course, you've got a Cummins as well, which is higher by about 4%. L&T may be taking some profits off the table or seeing some easing off. That stock down by less than 1% as we speak right now. Let's welcome on board Vinay Rajani as well to talk about what he's seeing on the charts right now. Vinay, afternoon. Let's start off with these two names, ABB, Siemens. What big movers today?
So this entire capital goods segment has been performing very well, and ABB has registered a new all-time high with a significant volume. Stock is up by 7% right now. The momentum is back after 4th June. We have seen that this has absorbed all the supply and recouped all the losses and now trading at its all-time high. So not only ABB but entire capital goods segment like Cummins India as well as Siemens and other MNC stocks have been performing well. So yes, entire sector is performing and ABB and Siemens still looking good. And the way they are closing today, I think next week also this rally should extend. So very strong setup technically, at least for the capital goods segment. So ABB, Siemens, in both the stocks, I have a bullish view.
Okay, so that's a view coming in on ABB, Siemens, some of these big buzzers in the trading session today. Separately, it is Chemplast Sumnar, which is up almost 10.5% because of the news of some import duty coming in on certain of its competitors. On the losing side, however, there's Aegis Logistics, which is down. Zensa Tech is coming under pressure. And even on the gaining side, there are names like Honeywell, Concord Biotech, Polymedicure. In fact, pharma as a space also has been decently active. Suven Pharma, Kunal, of course, is reacting to the news of the acquisition. But even other names perking up a bit.
Yeah, it's a sector which is again getting back into I would say a mild breakout move. I think Cipla, the last I had seen, Lupin, etc., they had done reasonably well for themselves. And I think over the last 4 or 5 days, there have been slight breakouts on the hourly charts. I'll call it slight breakout because it was more visible on the short-term time frame charts. That could probably maybe lead into a rally of 3% to 5% swing into these kind of stocks. Biocon, for example, that's another name which I've been bullish on. That's a stock which has been a bit more stagnant at the 340 levels. Glenmark Pharma has done exceptionally well. Zydus, I think the last I had seen was also trading with a positive bias for itself. So yes, many of these pharma stocks are looking strong on the charts, but then they are going through a very slow-paced rally for themselves. So I think it's more suited for individuals who are looking at a time frame of 15 days to 30 days approximately, with a swing possibility of 3 to 5% on the upside.
Right. Okay, that's the take coming in on some of these buzzing names. Balrampur Chini, though, is seeing some profit taking strangely today. That stock is down about 2.5%. That big move in sugar, which happened after reports of an MSP hike, which perhaps could come into the play, or export, exports being allowed as well. That seems to be sort of coming off. Even names like EID Parry, although it may have recovered and jumped back into the green, but significantly down from its previous highs. Vinay, just come on some of these charts. I mean, Balrampur Chini, for instance, does it seem like the profit taking could last longer?
I think this is a running correction in the overall bullish trend because on 4th June the low was 352 and yesterday in today's session itself it hit a high of 445. So it's after a stellar rally, it is just into a profit booking phase. But overall, I see a strong support in the zone of 450 to 420. So there could be some correction in the coming days, but overall trend looks very strong. And this was the stock which actually took lead when sugar started moving up in last couple of sessions. So Balrampur Chini looks strong positionally. This is just a profit booking, we can say, but in next week, anytime soon, around the levels of 415, 420, stocks could find support and resume the uptrend. So we have a bullish view on the entire sugar space, and Balrampur Chini is a large cap sugar stock, we can say. So view is bullish, and buy on dip should be the view for the stock.
Just flag out some of the buzzes, and since we are talking about pharma, so not just Concord Biotech and Suven Pharma, in the last few minutes there has been an uptick on the likes of Fortis, Piramal Pharma has inched higher. You also have other names from the pharma pack and even ancillaries doing quite well in the trading session. And the other one that we were just talking about some time ago was also Nykaa. It was fairly quiet when that presentation actually hit the screen, which happened early this morning. And we were all wondering why, despite a very strong commentary, the stock wasn't reacting. But in the last few minutes, it has managed to see quite a bit of perk up. That stock is up almost 4%. But Daljit, the other space I wanted to discuss with you is the corollary of the consumption that you were talking about, GMR Airports. Of late, there has been a lot of positive commentary around it, right from brokerages to the management commentary in terms of the approval for the merger which has happened, the tariff hike which is on the anvil, and the fact that the company is looking at simplifying the structure quite a bit, has brought down debt, and then of course there's a tailwind of overall rising income and the travel need. Would you be a buyer in the likes of GMR Airports and the other travel related names?
See, we treat this as a part of our infrastructure portfolio. So when we are very bullish on infrastructure as such, so which consists of everything, roads, ports, airports, everything. So if you are bullish that GDP will grow at such a space, and if government push will be there on all kinds of capital expenditure, then obviously these things fall in place. And GMR Airports has a particular space because it also is a kind of a indirect play on air travel. So, and we know that the way air travel is rising, the way Indians, even smaller cities, tier 2, tier 3 cities are getting airports. So obviously there is a lot of potential in this space, and therefore there's a lot more potential for these companies to make profits. Stock is at, I think, 2008 or so, it was one of the most favorite stocks of everyone. And then for next 15 years, it didn't do anything. Now they have learned some lessons. They have done some restructuring, cleaning up of books. All of that is now, I think, in place. So I guess there is a big rally in front of it now. Disclosure, we are not holding as of now.
Point taken. Thanks, Aljit, on that note for joining us today.
If you like this video, then like, share and subscribe to ET Now.